first chart, AUD USD. Now, for anyone new to our videos, we only use a few trend lines. We don't want too many. We keep the technicals simple. We've always got a bias from the fundamentals and sentiment first to decide our direction. That keeps the technical simple. We'll just focus on levels which we think are important to big institutional players. Also, when we're trading, we're normally looking for a reward of 300 to 500 pips potential reward. I think a lot of traders, retail traders, want to trade for smaller profits, like 100 pips and have a 30 pip stop loss. I think that's kind of not a great way to trade in what are volatile and noisy markets. Our stops are normally 100, 150 pips. Okay, so we're focused on big trends, and this one is developing into one. We did get a lucky entry at 76.60 off this candle tail exhaustion. Down mid last week, we had a little bit of a rally, then bang, down we go on Friday. Still plenty of downside potential in this one to 70, possibly even 65 in terms of playing this pair. Just go through how you might do it in a moment, but I just want to show you some charts that are relevant to the Aussie dollar, actually relevant to the USD, generally where it's going to go. Let me just go and find the chart. It's this one. I showed it last week. Aussie dollar has fallen despite strong commodity prices, but a bigger fundamental to weigh on the Aussie is declining global growth. And this is Goldman Sachs, who've been very accurate in terms of where global growth has gone in the past, and they're extremely bearish. Okay, they've marked down their forecast a lot. Okay, they're much more bearish than other large banks and Bloomberg. I think Goldman Sachs are correct. Global growth slowing up, just out and out bearish for commodity currencies. Okay, and I think if we look at the state of the global economy, I think a global recession could be on the cards. I think a lot of people still a little bit too optimistic about the global economy. Now, I just want to shift over to this chart here. S&P 500. Aussie in particular is very correlated with stock market strength or weakness. Now we do see a rally here. This is a daily chart. Put it up here. Traders just buy the dip like Pavlov's dogs, okay? But the buying runs out. Then we break to the downside. We get a nice red on Friday. I think stocks are very vulnerable to a big sell-off. If they start selling off hard to the downside, the dollar is really going to gain traction to the upside. I just want to show you this monthly chart because it's illuminating in my view. The 2-4 level here, the COVID sell-off, then the Fed come in with stimulus and they power that rally higher. That's all to do, or the majority of it to do with Fed stimulus and investors coming in who just basically have the view the Fed has their back. They don't anymore. The Fed are withdrawing stimulus, not just hiking rates. You've seen some downside. If we break this 20-month move-in average, you could see a really volatile sell-off to the downside, okay? So, I think the big picture points to more dollar strength and in particular more Aussie dollar weakness. Okay, commodities are strong at the moment, but if the USD continues to firm, they'll break lower, okay? Commodities are priced in USD, okay? In terms of playing this one, how would you do it? You could come in just on the open. If we opened around about where we are, sell. Your stop would need to be behind the second level, in my view. If we start selling off, let's say, towards the 72 level, you could pop your stop behind the 73 level. Looking for 70, then 65. Any rally back towards that 73 level, just look to come off it on weakness, okay? So, a decent trade so far. We hope it's got further to run. We shall see. Right now, we're going to go and look at another commodity currency, which is USD CAD. All right, USD CAD. Now, in terms of last week's video, we did have a long in, and then we got stopped out on this big red, okay? We brought our stop up. It was about 50 pip loss, but disappointing, obviously. We then came below 125. We just wanted to buy back through the round number. We get it. And then this candle follows on really nicely and takes out this sort of messy zone here, which was resistance. It will now act as support. So you could, if we move lower, buy off the level on strength with a stop behind 26. However, if we continue blue, just pop the stop behind this level here. I think if we continue blue, the odds of continuation to the upside are really good. So if we do open higher, we'll bring our stop up behind first level support. Same arguments that apply to the Aussie applied to the Canadian dollar. Yeah, shrinking global economy or slowing global economy is just out and out bearish. Also, I think the market's been a little bit too optimistic about how quickly the Bank of Canada will raise rates. That's in the price. I just don't see them as being as hawkish as the market expects. I think this is confirming, hopefully, a nice move to the upside. Now, I want to go and look at my next pair, which will be Euro USD. So, Euro USD, we are out and out bearish of the euro. I've covered the euro bearish fundamentals in detail in many previous videos. We think the zone is going to go into recession. The hit from the Russia-Ukraine crisis is huge. The ECB cannot raise interest rates quickly, in our view, but the market is still pretty optimistic on the euro. We only see limited upside and a lot of downside. Now, last week we were still holding the trade. We took at 111.40. We booked half at 108. Then the second half we were clipped on stop by 2 pips at 109.20, but it was an okay profit. We're back in at 108.50. We're presently trading at 108. Now, I do think the euro has got a long way to go on the downside. You can see my targets top of the page, 105, then par. However, in the short term, you might get a bounce early next week. Why? French elections conclude. If Macron wins, I think there could be a little bit of relief, and that could send the euro higher. But it is only the status quo, okay? So I don't see a really big rally. So if we rallied up towards 109, you could come off that level or this second level resistance, okay? Our stop is at 110.20 at the moment. However, if we don't rally up, and we would break to a new daily low, say 107.70, then I'll bring the stop in behind the 109 level. So if you're doing it fresh through 107.70, stop could be something like 109.40. Actually, it's an outside bet, but if Le Pen were to win, I think that would cause havoc in financial markets. I think, probability of happening is not high, but stranger things have happened. I think JP Morgan said the euro would drop 2 or 3% in response. So we'll see what happens. But any bounce in the euro selling opportunity, we're going down longer term. In terms of following big trends, and when you got the euro, which is fundamentals been bearish since it peaked out above the 122 level, they're still bearish and they're going to get worse. So it's a nice downtrend. We should get to this level here, which is 105, 2017 lows. And when the euro rallied there, the eurozone was in way better shape than it is now. I think things are so bad, we should go to the par level hit back in 2004. So plenty of downside in our view, upside limited. Now what I want to do is go to some more USD pairs. Next one I'm going to do is going to be NZD USD. NZD USD, and the price action, this one fairly similar to what happens in AUD USD. Get a candle tail exhaustion, we can get short. Bit of rally last week, then bang, down on Friday. Now, in terms of this pair, I've got a target of 65. You can see it's a monthly support level. I'm going to extend that down to the next monthly support level, which is 60. Okay. Now, in terms of this one, how would you play it? If we were to rally back up towards 67, just look to come off the level. This one I think you could do with a tight stop. You can see my stop is at 67.30. Okay, so that would not be too much risk. If you were wrong, be a negligible loss. If we break the low and continue down, okay, I think the probability of hitting this level would be high. So you could just come in, need to leave the stop back here though. Look for the 65 level, then hopefully the 60 level. So very bearish of all the major commodity currencies. There's some minor ones we're going to come to in a moment that look really attractive. But the next pair I want to go to is a euro correlated currency, which we looked at last week again, which is USD PLN. USD surged up on the Ukraine-Russia crisis, bit overbought, then we fell back, Then we trended lower on, optimism about ceasefire talks. Just don't see that conflict ending soon. We get back in at 421, and then we've just kind of traded in a bit of a channel. Okay, in terms of coming in fresh, this one, it's a break out of these two tails. That will break the channel. Then hopefully higher volatility back up to chart highs. Stock can be tight behind this level here. Okay. Poland, huge amount of business and trade with Ukraine, obviously shares a border, also does a lot of business with Russia. Also, if the euro starts to trend to the downside quite strongly, that will weigh on the euro correlated currencies like the PLN. So I think this one's worth watching. Where should we go next? USD MXN. Last week we were looking for this one to break out and clear the 20 level, which we did, but we came off the high. Now, in terms of the MXN, it is a commodity currency. It's an emerging market currency. Emerging markets tend to get hit the hardest in global slow ups and Fed, tightening financial conditions because they're so reliant on USD funding. I was a little bit disappointed if we came back on Friday. If you wanted to do this one fresh, you could just come in on E-Blue if you're really bullish like us, or you could wait for the high to give way and then see if we run to the upside with a stop tight behind here. Now, in terms of the targets, they're pretty ambitious, but we had last week ambitious targets in USD ZAR, and the USD has already exploded higher on the ZAR, so I'm hoping it's going to do the same on the MXN. We'll come to USD ZAR and update it in a moment, but the next one I want to look at is USD TRY, dollar Turkish lira. Turkish lira, another emerging market currency, normally very volatile, but look at these candles here. They're just small. You can hardly see them. You got really, really low volatility. Good way of playing this one is just to wait for a break of the range. I like tight range breakouts, either to the upside or downside. In this instance, I'm bullish, so it'll be to the upside. Give you breakout, you're looking for immediate follow through. Okay. If you don't get immediate follow through, you can just freeze the trade and take it out. Turkey, huge amount of problems. I think the dollar hopefully will get stronger. Hopefully we'll see the breakout and the move up to resistance. Last round we look at is USD ZAR. We looked at it last week. We wanted the 1460 level to be decisively taken out. It wasn't there. Next candle does though. And then we follow through to the upside. And in terms of knowing the sentiment behind the chart, it's a real help with this one, or any pair actually, because we knew that speculators hold their biggest short position in 5 years. So if you break higher, then the stops are going to get run, and that's what's happened. Okay, so it gives you confidence to stay with the trade. Okay, personally, I still think we're going to get up to our target, but would I come in now if I wasn't in? The answer would be no. I'd wait for a pullback to the 1540 level, see if we can find support, then go off that level, stop behind here. And in terms of emerging markets, the exotics, love trading them because you always, not always, but you very often get really big moves. This is what, 5% move, okay, in just a few days. So it was a really nice trade for us last week. In terms of the week ahead, you might see a dollar pullback, but that pullback will be a buying opportunity. But my view is the markets look very nervous. And you've got such huge problems in the global economy. Obviously, Russia, Ukraine has really impacted on inflation, which won't be going down. Central banks have to raise rates against a slowing global economy. That's not good. Then, of course, you've got risk assets like the S&P 500, really still at bubble levels. So if you get big move down in the S&P, that will cause mayhem in financial markets. I think, the dollar is looking good at the moment. Of course, nothing is guaranteed, but if we get pullbacks, we'd be looking to be buyers. But let's see if we can follow through to the upside next week. Let's see if we get another volatile week, which would be nice. But I think I've covered everything I need to. That's the video for today. Thank you for watching it.